Welcome to session 2 of the education series for the Nevada Rural Pitch Competition, Deconstructing Customer Discovery Research. I'm Karol Hines, a mentor with Entrepreneurs Assembly, a Nevada nonprofit. Entrepreneurs Assembly conducts roundtables, workshops, and events to mentor the entrepreneurial journey. As a reminder, the objective of this competition is to provide you an opportunity for anyone in rural Nevada with a business idea or existing business to pitch their concept, gain expert advice, and potentially win a cash prize to kickstart their idea or pivot into action. You will be participating in an entrepreneurial education program that includes training videos such as this one via YouTube and live office hours with mentors and advisors from Startup NV and Entrepreneurs Assembly conducted via Zoom. The culmination of this program will be a live pitch competition. All information about this program, the schedule of education and mentoring sessions, requirements for participating, and how to apply to pitch can be found on the website listed here and below this video, or by sending a message to this email address. This training, Deconstructing Customer Discovery Research, or Refining Your Product Offering and Customer Profile, is the second in the series of 5 training videos created for you to help ensure your success in building your business and prepare you for the pitch contest. Note that all live sessions, including pitch practice, will be conducted via Zoom. In order to receive an invitation and a link to participate in these Zoom sessions, please sign up by sending an email. The homework you had from your previous training session was to develop your value proposition and do customer discovery research, including creating a concept statement describing your business and your product or service, interviewing at least 25 prospective customers, and creating and conducting a buying intention survey. If you have not completed these steps, you will not be able to perform the tasks that will be explained in this training. In the customer discovery research, you were instructed to keep track of your feedback you received when surveying and interviewing prospective customers, and summarize the data to determine strengths. What did people who evaluated your product or service concept say they liked about your idea and what they did not like? Potential improvements. What suggestions did they have for strengthening or improving your product or service? Feasibility. What percentage of the people interviewed believe that your product or service is something that they or others would be interested in buying? How much would they expect to pay? Show me the money. This information is extremely important since it will help you to know if you can make enough money selling your product to be profitable, and where would they expect to find and purchase your product. In other words, where can you expect to find your customers? In the Entrepreneurs Assembly roadmap for starting a business, we define the stages as customer discovery, customer validation, and customer creation. We're continuing at this point to focus on the customer discovery stage. In this session, we will examine what you have learned through your customer discovery research exercises and use this information to refine your product offering and define your ideal customer and customer segments. Specifically, we will delve into analyzing the feedback you received from your interviews to determine what changes you will be making to your offering and your value proposition to create a viable product offering. Creating a definition of your ideal customer and an initial definition of your target market to determine the size of your market needs to be in order to be profitable. In the 4th training of this series, you will learn how to do the research to more accurately define the size of your market. Determining initial pricing for your product or service offering. Determining the cost of goods for your offering. In other words, how much does it cost for you to produce and deliver your product. Determining the gross margin for each sale, so you can determine how much is left over from the sales revenue to pay all other expenses of running your business, and defining the operating expenses of your business. We will be giving you some basic information on how to create financial projections so you can do your homework of developing a pro-forma financial forecast to determine if you will be profitable. Your homework will also include updating your business model canvas, which you began to develop in the 1st training session, and revising your value proposition as appropriate. Analysis of the data you collected during your research should allow you to answer these 3 questions. Have you found a product market fit? In other words, do you have a product or service that your customers desire and will buy? And can you identify a market segment that you can focus on of customers who will buy it? Number 2, can you describe your typical customer and do you know where to find them? You can develop a customer persona or archetype for your ideal customer. This will include geographics, demographics, psychographics, in addition to how your product addresses the pains and gains of your customer as defined in your value proposition. And do you have a good idea of where your customers are and how you will reach them and attract them to your product service offering? And number 3, can you be profitable and can you sustain future growth of your business? In other words, is the market segment you have identified sufficiently large to support an ongoing profitable business? Remember, customer discovery is about determining and validating the commercial feasibility of your idea before you start spending money. This is the first juncture at which you will look at the data and determine whether to punt, pivot, or proceed. You will be asking yourself this question each time you get feedback from potential customers. You may already have developed a prototype, a conceptual version of your product or service that you can use in your customer research. Remember the block of wood that eventually led to the PDA and then the mobile device as we discussed in session 1? That was a prototype. Reliable customer discovery research requires that you have some sort of prototype for demonstrating to your potential customers what you are proposing to build to solve their pains and or bring great gains to their life. You may also have developed a working version or prototype of your product. This will be required during the customer validation stage. In most cases, however, it is not recommended that you spend a lot of money developing a working prototype or minimum viable product before you have completed your initial customer discovery. There are, of course, cases in which a working prototype may be required as a proof of concept, such as when you are developing an innovative product using advanced technologies such as robotics or artificial intelligence. So here we are. Who is your customer? What did you learn about your customer as a result of your research? Now you will organize and analyze your data so that you can create an accurate description of your ideal customer. To begin with, you're going to describe your ideal customer in terms of demographics, geographics, psychographics, and create a persona or archetype. Demographics include things such as age, gender, education level, marital status, occupation, hobbies, etc., which are applicable to your product. If your customer is a business, the demographics will not be as personal and may include things such as annual sales volume and number of employees. Geographics describe where they are physically, in an urban, suburban, or rural community, and where do they shop. Note that this information is specifically to help you define your ideal customer and figure out where to find them, and may not be directly related to where you will physically find them in this online economy, because a lot of people are doing most of their acquisitions online. Psychographics refer to the values, emotion, perceptions, beliefs, and even interests of your ideal customer. Depending upon your specific product, this may include attitudes, value behaviors, life philosophies, and habits. For instance, if your product is a kit for performing a feng shui analysis of your home, your customer profile would include people who have a belief in the philosophies that support the practice of feng shui. It may be helpful to create a persona or archetype of your ideal customer to do this. Describe your fictional customer as a real person, including their demographics, geographics, and psychographics. Then describe a day in the life of this fictional person. Where would they encounter and use your product, and how would it improve their day and their life? This is an example of a customer persona created for Sarah, who is an ideal customer for a proposed coffee shop. A persona does not necessarily need to be a real person, but having a picture and giving this customer a name provides you with the opportunity to focus on the qualities of your ideal customer that you are thinking about, not just expressing. You are verbalizing these ideals about your customer that you may feel should be obvious to others. In addition, it may reveal to you aspects of your ideal customer that you may have overlooked, such as whether or not they can afford your product. Customer segmentation is the process of dividing your customer into groups based on common characteristics so that you can market to each group effectively and appropriately. Whether your company or business is business to consumer or business to business or both, you might segment your customers according to a wide range of factors, including and in addition to demographics, geographics, and psychographics. Using our coffee shop example, where Sarah is the persona of your ideal customer, you may have several other customer segments in which you could describe an ideal customer. For example, if there are businesses nearby, you may provide them with carafes of coffee for meetings. Also, you may collaborate with a caterer who arranges refreshments for trade shows and other events. Your business customers would be a separate segment, customer segment, as would your collaborative relationships with caterers. This diagram is helpful in defining your customer segments and determining which segments will be most profitable for you. As always, you start with understanding your customer's needs. You may also determine that the value proposition differs for each of your customer segments. Definition of potential customer segments will be important as you begin to determine the size of your target market. With each iteration of the steps in the customer discovery process, you may discover information that causes you to reevaluate your assumptions about your products and your customers. By keeping an open mind and not becoming discouraged, you are much more likely to develop a successful, profitable business. At this point in building your business, we still have not yet determined if you can be profitable. We're about to discuss your product pricing, cost of goods sold, and business expenses to determine just that. In training session 4, which will be available on September 10th, you will learn how to do the research to more accurately define your market in terms of size, growth rate, and segmentation. However, in order to do a profitability analysis, you need to have created an initial description of your target market based on the definition of your ideal customer and customer segments. Your financial projections will help you to determine how many customers you must have to be profitable. Therefore, you need to at least guesstimate the size of your target market, even though you may not have solid data points to determine if your market is big enough for you to sell enough for your product to be profitable. Another element of doing your financial projections is the price you will charge for your product or service. There are two important aspects of determining pricing. The first part is what you can afford to sell it for to cover costs and expenses and make a profit. The second part, the value of your customer, the value of your offering to your customer and what they are willing to pay. From your customer discovery research, you should have data on the second part. In other words, what they're willing to pay. Ultimately, pricing strategy is a very complex topic which deserves thoughtful attention. For now, we're just going to look at it simply through the lens of profitability. The first step in determining what you can afford to charge for your product or service is to determine how much it will cost to build and deliver it. The difference between your revenue from sales and the cost to build and deliver your product is called gross profit. Calculating gross profit starts with determining the cost of goods sold, or COGS, as it is often referred to. An easy way to envision COGS is to look at it for one unit of your product. For example, let's say you're building widgets. To build one widget takes $40 in raw materials, $60 in labor, and $5 in shipping costs. In total, these costs to build one widget is $105. Therefore, the price for which you must sell the product must be greater than $105 in order to make a profit. Of course, there are economies of scale that can be had by contracting out your manufacturing and manufacturing larger quantities at a time. These are all aspects of your COGS that you will be considering as you develop your business model and your financial forecast. In the case of a service offering, the cost of goods sold is not quite as straightforward, but it is important to be clear on which costs and expenses of doing business are directly related to delivering your service. The terms gross profit and gross margin are often thought of and used interchangeably. Though they are related, they're two separate terms and very important aspects of your company's financial picture. Gross profit is the difference between the amount you receive from your customers, or your revenue, and what it costs to manufacture and deliver your product, as we just discussed. Let's say we have set the price of our widget for $200. That would mean the gross profit for one widget is $200 minus 105, or $95. Gross margin is expressed as a percentage. It is calculated as the gross profit, the revenue received minus the cost, divided by the revenue received. In the case of the widget, the gross margin is 47.5%, which is just under 1/2 of what it costs to manufacture the product. Is this a good gross margin? Well, that depends. You must now pay all other expenses of running your business with the gross profits. What is left after paying these expenses, including taxes and interest, is your net profit. You may be asking yourself, what is a good profit margin? Well, a good profit margin will vary considerably by industry, but a general rule of thumb is 10% net profit margin is considered average, 20% is considered high or good, and 5% is low. Again, these guidelines vary widely by industry, company size, and can be impacted by a variety of other factors. Now let's look at what expenses you'll have to pay. Operating expenses are those expenses that arise during the ordinary course of running your business. They include such things as salaries paid to employees, research and development costs, legal fees, accounting fees, bank charges, office supplies, electricity bills, business licenses, and more. The general rule of thumb is that if an expense doesn't qualify as a cost of goods sold, meaning it doesn't directly relate to producing or manufacturing a good or service, it falls under the operating expense. These expenses are often summarized as SG&A, or selling, general, and administrative expenses. It is important to note that expenses of running your business do not include your initial startup costs that are non-recurring costs. These costs are not included in determining your profitability of your product or business. They will be included when you create your final financial forecast and develop your pro forma cash flow statement and balance sheet. Once you have determined your product costs and your operating expenses, you will be ready to create a pro forma sales and income forecast. Pro forma refers to a method of calculating financial forecasts using projections or presumptions. These projections are not meant to be exact. They are meant to be used as a tool to allow you to determine what price you need to charge for your product or service and how much you must sell in order to cover the cost to create and deliver your product, pay all of your operating expenses, and have some money left over. In other words, your net profit. Your financial forecast will contain 2 sections. In the revenue section, you will record your forecast of income from sales, deduct the cost of goods sold, and calculate the gross profit and gross profit margin. In the expenses section, you will record all of the anticipated operating expenses we just discussed. Since your sales volume will most likely vary from month to month, and some of your operating expenses will be monthly, some quarterly, and some annual, it is recommended that you create a monthly forecast for at least 12 months so you can record the expenses in the month you anticipate they will occur. Let me reiterate, the financial projection is solely to help you determine if you can be profitable. Before you launch your business, you will need to prepare more accurate sales projections, a realistic expense budget, cash flow projections, and a pro forma balance sheet. We're going to do an example for you so you can understand what we're trying to explain here. We're going to do a profitability analysis for the widget company. We'll do this analysis by projecting sales for two products, the basic widget and the premium widget. In this first iteration, we set the sales price for the basic widget at $115 with a cost of $105. That means there's a gross margin for one unit of just $10 or 9%, kind of low. The premium widget sales price is $300 with a cost of $145. This is a much better gross margin and gross profit and gross margin, $155 or 52%. As you can see, with the number of basic and premium widgets projected to be sold over the next 12 months, 430 and 233 respectively, the projected operating expenses exceed the gross profit from sales every month. The projected loss for the year is over $109,000. In this iteration, the sales price for the basic widget has been raised to $200, giving it a gross profit of $95 for one unit and a gross profit margin of 48%. The premium widget sales price and cost are the same as in the first iteration. So you can see with the number of basic and premium widgets projected to be sold over the next 12 months, that remains the same as in the first iteration. The projected operating expenses still exceed the gross profit from sales every month except month 12, where there is a modest profit of $255. Projected loss for the year is nearly $73,000. That's better, but not enough to demonstrate solid profitability. Now, on this iteration, the sales price and cost for both the basic and premium widget remain unchanged from the previous iteration, but the sales volume over the course of the year is doubled to 860 for the basic widget and 466 for the premium widget. With double the sales, widget company becomes profitable in 7 months and finishes the year with a profit for the year of just over $4,000. Though this is a positive outcome, relying on just an increase in sales volume to be profitable is risky. Of course, the expenses could be reduced, but it seems more likely that the gross margin for these products is insufficient. So here's one last scenario. For each product, the price has been increased and the cost has been decreased, so the gross margin is at least 75% or 3 times the cost of goods sold. The mix of product units sold has also been adjusted to determine a mix that would generate an adequate gross profit to cover expenses and be profitable every month. This is the exercise that you should do now to make sure you can build and deliver your product and sell enough of it at a price that generates enough profit to cover the expenses of operations and have a reasonable net profit. If you can't find a way to make a profit based on what you can charge your customers, in other words, what they're willing to pay, minus your cost of goods sold and operating expenses, it may be time to consider either a pivot or a punt. In this case of the widget company, we reduce the costs. That might be something that you have to do in order to be profitable. There are all these variables that need to be considered. To do these projections, you should use a spreadsheet program such as Microsoft Excel to develop your statements, so you can more easily make changes to your pricing and other assumptions as they change. There are also lots of templates available to you online, and if you would like us to send the copy of the template that we used to create this example, just send us a message. We covered a lot of ground today, which means you have significant homework. Here's what you need to do. Using the data you gathered in your customer discovery research, define your ideal customer, your customer segments, and a broad definition and approximate size of your target market. Determine the cost of building and delivering your product or service. Determine the minimum price you must charge for your product to have enough gross profit to cover your operating expenses and have a net profit margin of more than 10%. Create an initial pro forma sales forecast and income statement for your business to demonstrate your profitability. And in this training, we have expanded on your business model canvas that was initiated in the first training with defining your value proposition. Today, we focused on sections 2, customer and customer segments, 8, revenue, and 9, costs. As you complete your homework assignment from this training, you will also continue developing your business model canvas. As you work on defining your ideal customers, customer segments, and targets, you should also have enough information to begin working on sections 3, channels, and section 4, customer relations. If you have questions or would like more information about the business model canvas, be sure and visit one of the websites referenced here, strategizer.com or canvanizer.com. In the next training, we will review all sections of the business model canvas we have covered to date and talk about all remaining sections. Thank you for participating in this training session as part of the Rural Nevada Pitch Competition. You can also request a personal session with a mentor to give you guidance on any aspect of your project. Keep up to date on this project and submit your application to pitch your business by visiting the website listed below. Hope to see you at the live via Zoom office session. Good luck and have fun.